It's a wonderful time of the year, and it's not Christmas. No, it's another week where the market started to correct and bounce back upwards. It might be a tremendous week, and that's what we're going to discuss in this video, including my portfolio. Let's get started.
Hey, as you know, I'm a huge football fan, and our sponsor OKX is currently running a promotion with Manchester City. If you create a new account and you deposit €1,000 and you keep it on there for 7 days, you get one of those shirts for free at your home. And on top of that, you might be able to win a 2-person VIP all paid experience to go to Manchester City Chelsea. Make sure to get that account and maybe we'll see each other at the Manchester City game.
This week had a wonderful start of the week where also last week we have had a pretty substantial correction again on the altcoin markets, through which the sentiment is currently going through the roof when it comes to negative sentiment. And there's also a topic that's currently going around with the question whether we are actually going to have a bull market. And I've discussed that in the previous updates. I think there will be one, and I think that the beginning of this year, in terms of the price action that we've seen, is not what we're going to see for the rest of the year. And there are a few reasons why we have been seeing the fact that the markets have been having this correction. And the first one is the inflation remains to be high. At least that was the thesis on Monday. So yields were picking up momentum. And we are in a unique case where we've had a rate cut taking place in September. And since the rate cut took place from the Fed, instead of the government bond yields going down in terms of the percentage, they have rallied with an increase of 130 basis points. And there were two unique cases in history where that also happened, which was 1928 and 1998. And for our small history lesson, 1928 was a year where we anticipated 1.5 years of extreme bull market, the final stage of that era, after which we had the Great Depression and 10 years of deflation. In 1998, we had 1.5 years after that of extreme bull market in the dot-com bubble, and then we had another big crisis taking place. So in terms of what we're going to be expecting, I think that's what we're going to be seeing. But at least the inflation remained to be high in the sense that last week European data also provided that, for instance, the Netherlands is still picking up momentum. And having the yields going up is not positive for markets in general. It includes a lot of fear, a lot of uncertainty. What's the primary reason that we have such a high yield? Well, I'll discuss this in the upcoming video on Sunday, as we are then one day before Trump gets into the White House. So we're going to discuss all those topics there. The second reason is that the sentiment is just terrible, which means that if Bitcoin is having a correction, and we saw one on Monday where Bitcoin took all the liquidity beneath the lows, altcoins are always falling more. So as long as the dollar is as strong as it is and the yields continue to go up, the sentiment in the altcoin market is super bad. And then if Bitcoin starts to roll over, which we have seen, then altcoins continue to fall. However, we've seen a pretty substantial bounce back up. And after Monday and the start of this week, we get into the same old mantra where Monday is bad, rest of the week is good. That's generally the type of trading that we see. As on Tuesday, we had multiple news items coming out that was actually fueling the bounce back up. And the first thing was we are in an inflationary data week, and PPI came out. And PPI is the producer price inflation or index, which generally says what the inflation is doing. Fun fact, in the UK, the inflation is year to year minus 1.5%. So there's already deflation taking place. In the US, we see that instead of the expectations of 3.8% on core PPI and 3.5% on PPI year to year, it is 3.5% and 3.3%. So a big miss to the downside, which is positive for everything risk on. And as a response from that day, we saw that the dollar was reversing. We saw that the yields were slightly curving down. The dollar is the most important one for crypto. And that resulted into a strong bounce back up on the altcoin markets, which we discussed in a little bit. And then also some news factors came out on Trump, where the first thing was that he stated that he'll issue orders on the first day in the office on crypto to make crypto great again. So there are high expectations of the first weeks where Trump gets into the office. And then also he is going to expect to repeal the crypto accounting policy requiring banks holding digital assets, which technically says that he wants to transform the entire regulation when it comes to crypto. And all of that resulted into a positive twist of the markets after Monday took place. And that's what we're going to discuss next. When we look at the price action of the altcoins, we can see that the altcoins continue to suffer. Ethereum against Bitcoin is still in a constant bear market, where if we look at the higher time frame RSI, for instance, on a monthly, we're getting into territories where the switch or change of plans or reverse or whatever you want to call it is going to happen, where there are a few key points that you need to be looking at when you are deriving interest into the markets, which is the dollar and it's the 10-year yields. They are both having an impact on the market sentiment. And I'll discuss these in short and the correlations that you can actually see. The first thing that you can see is that Ethereum against Bitcoin is technically almost again making a new low. The climate is likely going to change depending on when Trump gets into the office. And then the question is how long that will be the case. But if you're going to compare this chart with some other charts, that's when things become really interesting. Well, the first thing that I wanted to do is I've brought up the total market cap chart, which is the candles that you can see here. And the pink line is the DXY, the dollar currency index. And what you can see is that during a period in the previous cycle, since the peak in December 2016 of the dollar and the fall into February 2018, that was the great bull market of crypto in 2017. After that, the dollar continued to show strength. So that is automatically when Bitcoin and crypto is not interesting. We've been into a bear market since then until the Corona crash took place and then the dollar weakened, resulting into the bull market that we all witnessed. And then from this low on, we actually reversed back again. And in 2022, we had the strongest dollar rally in a long time, resulting into that the actual peak of the dollar was close to the bottom of Bitcoin's price action at 15K, resulting into a momentum of Bitcoin showing a lot of strength since that moment. But crypto and altcoins haven't been showing strength, and that is where the additional interest comes in, which is the yields. So you can see that the correlation between the dollar and the crypto markets is massive. And you can also tell that on every tick down, as you can see here, if we start to zoom in on the previous period, every tick down, here we had a tick down and we started to rally up. Here we had a tick down and we started to rally up on Bitcoin. Here we've seen a period where the dollar continued to rally and that couldn't really provide any upwards momentum for Bitcoin. Here we can see that we had a peak and a fall of the US dollar currency index, resulting into the next impulse. And actually the same took place multiple times in the previous year. And now we are seeing that we're again reaching a high on the US dollar currency index, where it's very likely that once that starts to turn, the price action of Bitcoin is going to be positive. And then the question becomes, what do we need to see more in order to have momentum on the altcoin markets? And that is where you can get the correlation between the US dollar currency index and Ethereum. And you can technically see that when the dollar is going to be weaker, that Ethereum against Bitcoin does well, as people tend to move on the risk curve. However, we can also see that in the previous period where the US dollar started to fall, Ethereum against Bitcoin started to continue to fall. And that is mostly or primarily due to the fact that the correlation with the US 10-year yield is substantial at this point. You can see that as long as the yields continue to have a high climate, in this case we've seen that Ethereum is not interesting. And that pendulum needs to swing. So if you look at it from an investor perspective, and if you have a basket of investments, if you can get 5% on your government bonds on a very secure country like the US, secure I would say, that is going to yield you a substantial return, and there's no reason to go heavier on the risk curve. So if the dollar becomes weaker, that's going to inject money into Bitcoin, or at least investors start to move towards it. And then especially if we have the ETF, it's going to fuel additional strength. And if the yields start to fall, you can go further on the risk curve as money is cheap, and you want to be on the risk curve as having government bonds doesn't really make sense. So that's why you need to combine the two. And that's why, despite the fact that the dollar went down and Bitcoin started to rally, the altcoins have still been suffering in the past period. And that's what you see in the charts here. Now, what we see on Ethereum against Bitcoin is technically a case that we have seen a sort of final capitulation period. That in this week, we are approaching Trump's first week in the office. And it's expected that Trump getting into the office is going to result into lower yields and into a weaker dollar, as his government needs to have a weaker dollar to solve his debt issue. So it's not expected that this is going to last. And especially if you look at the US dollar, we can see that we've had this tremendous week here taking place on the previous week, where it's very likely that this is going to turn. And once it starts to turn, I can assure you that that's going to be the moment where the altcoins start to rally finally into that big bull cycle, where you can also see the altcoin markets against Bitcoin. So for instance, if we're looking at optimism against Bitcoin here, it's still consolidating. So basically, not really much has been happening since the summer, but that is also because the dollar and the yields continue to show strength. And if the US dollar shows that strength and the altcoins are not collapsing but accumulating, then you know that you're on a tipping point. So when something changes on the macroeconomic dynamics, that's the moment where the altcoins start to fire off. And once they do, it's going to be a big move. And what I want to see in the upcoming week is that I want to see a green candle close for this week for the Bitcoin pairs, for the altcoins, and then a strong next week, because that would confirm that we are bottoming out and that we start to yield up. And that's when we can slowly start changing that sentiment. And the same can be said for most of the smaller altcoins that I've currently got in my portfolio. Here's one that's called Renzo. It has been making lower lows, lower highs, and currently it has been taking the liquidity again, but it starts to make a green candle for the weekly, where if this one closes in a positive candle and next week is going to engulf the previous one all the way towards 40 sets, that will be a trigger that we're going to be reversing the trend. And that will be the period where everybody starts to become happy. So I think that this week is going to mark a lot of momentum into the markets, as the sentiment is going through the roof in a negative way. And the price action is on a cycle low, where we are about to get Trump into the office with a weaker dollar and lower yields. Now in this part, the question is, what do I do with my portfolio? And I think you've got the answer already, which is the case that I see things changing on a macroeconomic playing field. We are having a very strong dollar. We are having relatively high inflation. The yields continue to be high, but that becomes the central topic, which is usually a peak moment in euphoria about that topic, where I think things are going to be changing with Trump getting into the office. So there's no reason for me from a fundamental perspective to change my portfolio, in the sense that I'm not going to be selling it towards Bitcoin. That could be a reason, as in, if we're going to expect the dollar to go down but the yields to stay high, that makes actually sense to stay into Bitcoin. But I think the yields will fall too. And I think that we are going to be into surprises on the labor markets data, where QE needs to start up again, even weakening the dollar further. resulting into a stronger bull market on the crypto assets. And especially if we're going to have a green candle close for those altcoins against Bitcoin, I think the return starts to kick in. So from that perspective, I don't sell any of my assets. I'm currently holding them all. And I think if you have a portfolio in terms of altcoins, you should be doing the exact same, or at least you should be considering questioning yourself, watching the chart, seeing all those altcoins at cycle lows, and question yourself, if you wouldn't have any position, what would you do? And I think your answer is that you would most likely be looking at buying the actual asset. And if that is your answer, then it technically says to hold your portfolio. So I'm very much looking forward to the coming weeks in terms of volatility. It's going to be great, and I'll be keeping you updated on all those things. Thank you very much for watching to this update. I'll be back on Sunday about Trump and everything that's going to happen. Make sure to subscribe.